Second. All right, hold on 1 second. To pause it. I have done a onboarding video for you guys, which is underneath this which this in this Google Drive video over here. I think I am going to I'm going to probably redo another one, which is probably clearer and straight to the point without any sort of questions. Probably just record one by myself so that I don't get distracted by you guys, right? And then upload it for y'all. Um, and it's not gonna be on the Google Drive, so you guys can just access the video inside the Discord server, okay? But other than that, all right, please make sure to check our schedule, okay, from 7 to 8 a.m. Eastern. From Monday to Friday, we have live trading by Frankie and Tux, and then end of day review. This is what I always do. And then this is what we're having right now, and then option live trading is from Monday, Wednesday, and Friday. Hey, this is the end of day reviews, the beginning help session and stuff. All these will be recorded and posted inside recorded reviews over here for you guys. Okay, so you guys can go through it. If you guys don't have any sort of you guys don't have time to join the session. All right. Of course, there is a lot of other stuff that we provide, right? If you want psychology, there's psychology help over here. Um, there's psychology help over here. There are some lessons that you guys can go through as well. It's going to help you guys a lot in terms of mindset. I think a lot of the stuff, especially when it comes to new traders, right? A lot of the issue you guys have is the mindset. It's not letting you guys. That's always that mental block, right? I think you see some of you guys were telling me during the chat in the on Friday saying that, hey, I took too many losses. I was afraid to take the next play, and then the next play ended up being one of the biggest runs, and you're like, fuck. And then if you end up start chasing it, then you start risking yourself in bigger positions to lose, right? So very important to have all these over here. These are all gonna help, right? And these are the alert section. I'll do a whole video for you guys again. Okay, I'll do a whole video for you guys again. We should clear things up for you all. Okay, all right. Now let's begin the session right here. Let's begin the session right here. So now you guys were asking me for one of you guys was asking. I would like to understand how you exit trades or do stop loss. Getting in is easy for me based on alerts, but getting out and locking in profit is a bit more complicated. Okay, so now let's go through an alert. All right, let's go through an alert and see, how I actually manage it and stuff, right? Now, if you guys have been through the onboarding section, now this question is from MLR28. Okay, if you guys can go through the onboarding section and you guys have been here with me long enough, I think you guys should know by now that I do not emphasize on holding full position all the way to the top because that first thing is unrealistic. Right? There's no way we could know that was going to happen, and it's very important to make sure that you do not treat it like that for every single play. Because if you do, you're just gonna end up losing money. Okay. So underneath this onboarding section over here, there should be this channel over here that says trading rules and how to read my alerts. If you click on this over here, there is a section that it will bring you to this page, right? And then it also says how I manage my trades. And this should be what you're actually looking for. All right. So I basically just did a write down about how I actually manage my trades over here for you guys, so that you guys can kind of just use it as a baseline to configure how you manage your trades. Now, for me, I do not this has been posted since 2022, right? And I've not changed the way I've done things. Okay, it's been 3 years ago. All right, so this one over here, okay, it's very subjective. Of course, this is just a general baseline side of things. All right, if the market's slow, right, then obviously I'll take out a lot more. If the market's hot, then I'll probably leave more and take out a lot less, right? It depends on how the market conditions is. Again, like I said, when we're trading small caps, we're really dealing with a lot of uh random factors, so we have to adapt to it. Okay, but this is generally how you guys go through the direction I just told you. You guys can look through all this and help you guys out with your trade management. You can use this as a baseline and then figure out what is the best percentage of numbers that you guys need to stick to, right? So psychologically speaking, you feel better in the trade as well. Very important on that, all right? Very, very important on that. That's one. Let me see. Hold on 1 second. J. All right, so that's the first one. Now, second one over here is going to be, let's go through one live example, right? About how how I took a trade stuff. So let's take a trade that's working out and a trade that does not work out. All right, so that we kind of know how I actually manage my trades here and there. Let me log in my broker. All right, we'll take IPDN first. Okay, we'll take IPDN first. Oh shit, second. Okay, so let's take IPDN and we'll take another one that doesn't work out. So because I want you guys to understand, not every single trade that we take is going to work out. All right, not every single trade that we take is going to work out. There'll be some trades that don't work out. There'll be some trades that works out really well. Okay, it's all about managing your risk. All right, if you are gonna turn a blind eye on a trade that doesn't work out and just continue holding on to the stock, you're gonna end up hurting yourself. Right, that is just how things are going to be when you trade. Okay, it's very, very important. It's very, very important that you guys are respecting your trading plan. No matter how much of a hope or hype you guys have, right? So let's take a look at this, right? So we take one that works out, for example. Let's take one that works out. So we'll start off, very easy IPDN and stuff, right? So IPDN, okay. I told you guys I was taking some at 320s. Stop loss is on the 290s. I'm looking for 360 and more. Okay. Now this was at 957. So if we look at IPDN over here in the morning, okay, this thing went, had a very, very, very nice trend, right? It's just been trending up all the way. Price went down underneath the 21 EMA trend line, which was trending on the 1-minute chart. All right, as you guys can see, a little bit. Now price broke down for this 21 EMA trend line, this light blue line over here, and it started to base very nicely on this 50 EMA. See that? Very nicely on this 50 EMA, right? This dark blue line right here. Now, of course, this doesn't really mean anything, but we have a very nice reclaim of structure, right? Where, the price reclaimed the 21 EMA trend line, and based on it, and most importantly, reclaim VWAP. Now, if you guys look at my timing over here, my alert for IPDN was at 957. All right, 3.2 to stop loss on the 2.9. Okay, and if you look at this candle over here, this is 957. All right, I'm from Singapore, so I'm 12 hours ahead from you guys. So it's 9:57 24 hours clock. It's nighttime, so it's 21:57. But that's 9:57 a.m. Eastern. So this is where I took my entries, 320s, as you guys can see. All right, now it can be 323, 324, 325, 326. It doesn't matter because remember, I'm not here to tell you guys that I'm in at 323, selling this at 327. I don't do that shit. All right. If I want you guys to secure base hits, then I think where your entry is going to be very important because every 5 cents to 10 cent movements is very it's important, right? Because a 5 cent move might just be a basic scalp. If let's say I'm looking for a 10 cent move, for example. All right, if I'm looking for a 10 cent move, I'm telling you guys that, hey, I'm in at 315, for example. I'm looking for a move to 330. If you add a 320, right, then you only have a 10 cent upside move. But that's fine with you if you're looking for base hits, like I mentioned with Nuke the other on Friday, right? So when it comes to base hit moves, okay, of course the entries has to be a little bit more accurate. You want it as close to me as possible. But when it comes to tickers that I think have potential to exploit, I'll just put the 3.2s. Because you don't really need to be so accurate to the point where if I'm at 327, you don't tell me you're not going to take 329 entries. You know what I mean? You can't get the same exact entries as I do. Sometimes you can get it better. Sometimes you can get it lousier. But it should not be too far off, right? If I'm telling you guys that I'm in at 320s, okay? And you're telling me you added this at 350 something. Now, obviously, that's too high. And I say that this is too high, not because you can tell me that, oh, but if I add the 350, I will still make profits. That's correct. That's correct, right? You can say that after seeing the move. But what if the stock, okay, does this, all right, at 350s, okay, it hits this level at 360 and goes down like that. So adding 350s doesn't make sense anymore, right? You understand? And especially so when you know for a fact that I'm looking for a move to 360 first. And if you see my alert at 320s at 927 again, the alerts are there for you guys to act on it immediately. This is a 927 candle, right? The highest this thing went for is 336. The candle closed at 330, right? It's, and this timing over here, this thing went from 313 to 325. But I did not, because I added on the way up, right? So I was in at 325, 326, 327. So you can kind of add it over here at, 330 and stuff. That's fine, right? But if you're telling me you're adding a 350s, I think that's a little bit too much, too high. Okay, that's a little bit too high. Now, where did I take my profits then, right? That's one of the question, right? MLR, where did I take my profits? My first profit scaling area is basically anywhere near 360. So the next candle, when we popped all the way up to 350, something 360, I start scaling up profits already, right? Either 30 to 50% of my position size. I never ever hold, big moves. I never really hold, full size for the bigger moves and stuff, because you still have to understand and respect the chart that the stock, might actually, right, reject this level. There is no guarantee that this is going to break out from this. And we've seen this many times before, right? If we use GMHS, for example, in the morning when we try to trade this for a little bit, okay, you can see that we have see 1 second. We had a mini downtrend breakout over here, right? We had a mini downtrend breakout over here, right? And then price keeps trying to push, but there's so much wicks on this, okay, that we couldn't break through the opening candle, right? The opening candle. Okay, you can see that the closing. Sorry, over here. This is the opening candle, right? We couldn't close above it, and price went down. But it was looking like it wanted to break out from it, isn't it? It was looking like it wanted to break out from it, right? But looking like doesn't mean that it is going to. So remember, I always tell you guys that do not anticipate price action, right? Always react to it. So the same thing for it's the same thing for IPDN, right? It's exact same thing for IPDN over here, right? So would I take why I take my profits? Realistically speaking, at 360, I'll trim some. I'll trim some at 360 over here. Okay, remember, I'm trying to tell you guys how to do things properly and not hold on to it. Now, that's the first part, right? Because I want to de-risk some, right? Now, but at this point in time, I know that Nuke is dying, which was one of the runners in the morning. I know that IPDN was also sorry, not IPDN. What was the other ticker? GMHS was also dying, which were one of the momentum runners for the day. Then my remaining shares over here might be 70% left or 50% left. I will feel more confident holding onto this because I feel like because this is the only ticker that has shown momentum strength, right? In terms of the price move to the upside. And you don't see that with GMHS, right? GMHS was going all the way down already. Nuke was going all the way down already, right? So if that's the case, if you have 3 tickers, 2 of them are dying, and the only one is showing strength, it makes a lot more sense for you to be more confident in this position you're in, isn't it? And at this point of time, you can start to focus on respecting the chart. Now, you know for a fact that based on this chart, we have a price bouncing off the 50 EMA, correct? Now, when it comes down to it, this is my secondary trend line. My first one is 21 EMA, right? Where the price was based off and then reclaim it, right? Now, as the price broke through this key level over here at 360 or 370 or whatever, but my 360 was the baseline, okay? It was like this, right? So this is the first line, and then of course we're at the top of the wick, which is 370. Now, when price reclaimed both of these levels over here, and you see everything else dying, if you want, you can take your profits on this pop to 395. You could trim some, you could trim 10%. But right now, this is where you can start to focus on really maximizing your trades over here because if you were tracking GMHS and Nuke, you know that they were both dying, and you know that this is going up. So in terms of volume rotation by theory, this should be the only ticker that starts to flow, unless we have another inject. But did we have another inject on Friday for those of you guys who have been here? No. There were no other index moving on Friday, right? There were no other index moving on Friday. So now you want to write the trend, write the 21 EMA trend line, write the 50 EMA trend line. By right, okay, if price does not break underneath this 21 EMA trend line, you can continue to hold on to this as long as you want. If price does not break underneath the 50 EMA trend line, you can hold on to this for as however long as you want. Okay, so if you respected the thesis, then you scale some profits over at 360. Let's say you're remaining 50% position or 70% position, you can start selling it over here at 635 when it loses structure. Okay, selling some, I would say, or closer position. Either way, it's a beautiful trade. But you see, when price breaks down, it does not mean that it's not going to recover. You understand? When price breaks down, it does not mean that it's not going to recover. So for me, I emphasize taking profits on the way out because there is no guarantee that the price is going to go from here, right, from 360 all the way to 6 plus before breaking down. We've seen it happen before where price breaks out, goes like that, and it starts breaking down. And because of that, you're not gonna be able to secure that move because you want to ride the trend, and it doesn't move high enough for that trend to actually catch up to it. Very, 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 very situational, right? If let's say there's a day, it's a Thursday where there are a lot of potential runners and stuff, and IPDN is one of them, but there was other 2 tickers that starts running as well, then it becomes very confusing for you to really stick to a ticker. But this was very well given after you see Nuke and GMH break down. I'll show you guys a time frame over here, right? We look at the timing again. Okay, if you look at Nuke, over here, it started to break down at 9:55 onwards. Okay, we not even say 9:55, right? We say over here at 9:37 onwards, it started going all the way down. Remember 9:37. GMHS started going all the way down at 9:50. So 9:37, we see a bounce a little bit on Nuke, right? So now we want to see 9:55. But 9:55, this thing is where it started to, went up over here, rejected this daily gap and went down, right? So 9:55, 9:50 is where GMHS and Nuke start to break down. Remember that. Remember this timing, right? 9:55 and 9:50 is where I'll answer questions later. Sorry, one by one. 9:55 and 9:50 is where the ticker starts to break down. Okay. If you look at IPDN at 9:50 to 9:55, this was the 9:50 candle. Was it? So remember, at 9:50, this thing was showing, this 9:55 for Nuke, it was showing drastic move to the downside. GMHS at 9:50 was showing drastic move to the downside. You guys see the candles, right? It was showing drastic move to the downside. IPDN, so remember, that's 9:50 to 9:55, right? 2 of these were competition for us, for IPDN, because they were all holding up momentum and volume. At 9:50, it was this candle. 9:51, 52, 53, 54, 55. And when Nuke and GMHS finally broke down, that's where volume started to rotate in over here. So this is a lot clearer for you because you know that this is the only ticker that you have, right? So I'm going to trim some over here. So each time we make new highs, I'm going to trim 10% out slowly. To the point where I usually like to leave like 10 to 15 or 20% of my runners, right? If let's say I have confidence that, okay, you know what? I feel like this ticker is going to be the only one running today because there is no other better option. The other options are all dead, right? This thing has a pretty good catalyst. Then I'll probably hold like 30% for more or 20% for more. If I feel not so confident, I'll probably leave like 15% for runners. And this 15%, I'm going to start respecting the trend line over here while I slowly take profits on the way up. You see, what I'm trying to say over here, MJR, is that you could trade, MLR, is that you could trade based on the trend line. You could respect the EMAs and stuff, that's fine. But nobody will ever know whether a stock's going to start topping out over here and go down, or is it going to continue. Right? If you realistically just respect the trend line, the EMAs, then it makes sense to not sell, right, until you see it break down. But that also means that you will not be taking a profit at 745. You'll be taking a profit at 638 instead. You know what I mean? You'll be taking a profit at 638 instead of 745. Because nobody can call the top of the stock. Eventually, everything will start to break down. Right? Eventually, everything will start to break down. You see that? eventually everything will start to break down. So it's still very important to just focus on what your profit target is, your trade plan is, and once you've hit a good amount on your trade that you're happy with, for the rest of your shares, set your stop loss at either a trend line or your entry, and then just leave it and watch the chart if you're actively watching it. If you got to step away, then step away then. All right, but if not, just be happy with what you have, because if you take a trade from 320s, it goes to 4 plus. On a normal day, if we don't talk about parabolic stocks like this, right? On a normal day, isn't that a very good trade MLR? If you've been trading long enough, you would know that from 320s to 4 plus, you take everything out. That's a beautiful trade, right? Moves like this don't happen usually, but this is the thing about small caps. These type of moves happens most sometimes, right? And even if you just leave like 15% of your position, that's still a lot. If you really go and think and calculate, right? Let's say 10%. We go so to the extreme, right? If we say you leave 10% of your position, you have like 100 shares left at 320s. This move over here to 1084 or $10. Let's say to $10, right? Your 100 shares runners will give you an extra profits of $680, where you don't need to panic or look for re-entries and over-risk yourself, which I think it's stress-free for you guys. After the initial move is made and you have protect your position. And if it doesn't go to 10, maybe the remaining 10% goes underneath, your stop loss. You shouldn't be so hurt about it, because, it's eventually, this is where you are going to end up being still green, right? So the 10% is like a bonus for you. Either it works out super well for you, or if it doesn't work out, it's fine, because you have to secure your main base move over here for profits. Right? Nobody can tell where the top of the stock's going to be. I could say I sell everything over here right now because we lost 745, right? I sold everything. But maybe next week this thing goes to like 11, 12, 13, 14, 15. I don't know that. There's no way I can know that. But if it does, I'll look for re-entries again. That's all. Or maybe I could just say I want to set my stop loss at 320. I'll leave my 10% runners until it triggers. That's fine too. You never know. Right? So you see, nobody will ever know that. And these are not really stocks that we can really hold on to for multiple years and days and stuff, because they're small caps, right? Eventually they'll all go back down. So very, very important to treat them like that. All right. Okay. Sorry, let me just go through MLR first, because this is his question. So is that clearer for you? I mean, remember, you could always just write the EMAs, right? But you see, if you write the EMAs over here, then you'll be red. You understand? Right? If you write the EMAs over here, if let's say, I'm in at 320s, it goes to 350s. I trim some because I know this is resistance. Right? It pops to 387. Now I have 50% left. I don't want to trim anymore. I just want to write the 50 EMA trend line. Right? Let's say from here, right, this thing goes all the way down. Then you would have to close your position underneath 304. You would give them some profits back. You would still be small green. But I mean, a move from 320 to 395, on a normal basis, 70 cents move, I think that's great. If you have 1,000 shares over here, okay, if you have 1,000 shares over here, think about this, yeah? If we sell everything, right? That's a $700, or let's say if you trim all the way up, that's a $600 profits for you in 2 minutes. Let's say maybe you guys cannot afford 1,000 shares, right? We talk about 100 shares, right? For a small account relativity. That's a $60 to $70 profits for you in 2 minutes. Where are you gonna find a job that pays you $60 to $70 in 2 minutes? You understand? It's not really about how big the move is going to be, because remember, not every single stock we trade is going to be like that. Because if we think that every single stock we trade is going to be like that, you're going to end up ruining yourself in the long run. That is the fact. Unless you tell me the market has been showing every single day the stock move like that, then fine, right? Then we adapt to how the market conditions are. But last week market conditions was a little bit choppy, right? It was still, we would still have runners, but it was very choppy, right? And once the chop actually goes past, or passes by, then we can start to get clarity on our positions, or on what's actually going to run. But before that, there's no way we could know that IPDM was going to do this. There's no way, because Nuke had the potential to run, right? You see, Nuke had the potential to run. GMBHS also had the potential to run. It's not for sure that you knew IPDM was going to run. Nobody is going to know that. But as time passes by, as you let the price action correct itself, then you get a stronger idea of which one's going to have more strength. So that's the reason why for me, I didn't know. I'll tell you guys, right? I thought GMH was going to go, right? Because this is a Chinese name. It was showing a lot of strength. Yes, last week, yesterday, previous day, we had SOGP that went crazy as well, right? Nuke was another one as well. They all had potential to go. But when I saw weakness in two of them, why should I not take my opportunity over here? I'm ready to take my losses on this. So now we talk about how, we trade profits on this, right? So let's talk about how we take losses right now then, because they're both equally very important. Okay, they're both equally very important. Now for GMHS, all right, I took my entry to 253, to 235, so also 225, right? Now you see when it comes to taking losses and stuff, I'm more than willing to cut off early because now look, price went under VWAP over here, right? Price went under VWAP over here. Okay, on the morning volatility. Let me just show on VWAP so you guys it's easier for you guys to see this. Okay, so price went under VWAP over here, right? And you can start. Oh fuck, sorry, one more. Right, so you can see that price starts to reject this VWAP a lot. A lot of candlesticks are they reject the VWAP level, right? And we also had a downtrend. Now, when price starts to reclaim this downtrend over here, okay, attempted to, but had a long way down. But buyers stepped in again. Now, this seems like something that could squeeze. And at the end of the day, this is a Chinese name. Anything can happen. And we saw SOGP the other day squeeze hard. So I had my mind over here thinking that, we could go higher over here. And that's the reason why at 947, okay, at 947, which is right here, I took my entries because we broke the downtrend a little bit after reclaiming VWAP. You guys see that? But, we still have this opening candle, right, where the price couldn't break out from, right? I wouldn't even count this entire part. Okay, from the wick to the closing price of the opening candle. We're gonna break out from this. But if we break out from 260, there's a chance we might squeeze. Right? There's a chance that it might squeeze, right? And I like how the price tries to drive short to drive the price. Thinking about this, right? Short to price to drive the price down, but then buyers stepped in the weekend view and pushed up again. Doesn't this look like it could squeeze? You know what I mean? You see, I never ever tell you guys that, hey, I'm gonna get into a trade knowing this is gonna happen. I don't know. But I know that there is a chance that this thing could squeeze. Right? And but if it doesn't work out, I'm gonna respect my plan. That's just how it is. So that's the reason why my stop loss was under 225, because that's our current support over here. All right. I could say 227, but I like to round it off to whole numbers. You know what I mean, right? So price went down over here, went under 245, and we pushed up to the 260 level. Okay, now if for me, did I skill anything over here? No, because I was in at 253. Right? It doesn't make sense for me to take a profits at 260. Doesn't. I want to see this kind of break out at 260, and it's 265. Then I'll start trimming some. If I were to take some dips over here, which I told you guys to take dips, right, to 235, right? If we dip all the way down to like 245, I may grab some, and if it pops back up to maybe 262, 263, I may trim some. But what I don't like about this is the fact that the candle, all right, tested this resistance line over here. We retested the downtrend breakout as well. But then the third time we tested, there was a strong selling candle. And then followed by another strong selling candle that broke under VWAP. Now, and now VWAP becomes resistance. You guys see that? Now this VWAP becomes resistance, which was the same situation as over here. My thesis that I like for this is because it reclaimed VWAP. But now that it broke through under VWAP when it was attempting to break out from this level over here, and it became resistance, why should I still stay in this? Why? Why should I stay in this anymore? So is it very important for me to stick to my original stop loss plan over here? No. Because it's clear that this stock is showing a lot of weakness. Right? So I could close it off at 955, close out at 233, right? Which is right here. Right? I closed it off at 233 because I wanted to see if price could try to reclaim VWAP. It tried to, right? It tried to, but then price got driven down even further. And to be honest, that's where I start to cut already. Because I don't want to stay in this weakness anymore. You guys see that? So MLR, I gave you an example of how I executed my trades on both a winning one and a losing one. Right? So I hope that clears that's on this, and my stop loss is based on the chart. Remember, my stop loss is always based on the chart because we trade based on the chart. We do not trade based on our percentage, we do not trade based on our emotions. We have to trade based on what the chart is telling us. Okay, all right. So that's how I close my position over here. It's too weak. It was weak. It looked good. If you guys were looking, if you guys know right how candlestick works, you guys are looking how this setup structure looks like. It looks good, and with the fact that SOGP the previous day squeezed from $5 to $16, and this is also a Chinese name. I mean, you gotta think that this might have potential because it almost looked like it wanted to do something. Okay, it almost looked like it wanted to do something, isn't it? Like, you see over here, this looks ugly as shit, right? But buyers didn't give up, and we even broke the downtrend. And we tried, we really tried. Right? If we form a hammer candle over here, volume pushed up and try to test and break out. But when you see a rejection candle like that, you gotta start to think about getting out of your position because clearly it's just not working out. Right? Clearly the volume is gonna flow out. Right? Then you get out and you look for you look for where the volume is gonna flow to. Right? Which is IPTN, which is why, I switched up as well. Gotta adapt to it. Okay, I'm not gonna stick into something just because I don't want to be wrong. I keep saying, hey guys, buy dips, buy dips, buy dips, buy dips. Right? Eventually this will go up. That's bullshit. Okay, MLR, did that answer your question? Okay, all right, that's good. Okay, so very good question for MLR. All right. So next one over here is going to be Kevin Skeen. How do you determine which momentum mover is getting all the volume? Are you looking at those charts simultaneously? How do you determine the 50 MA is structure for IPDN? So Kevin, I think I just kind of partially explained to you how you can look at the momentum, right? The momentum move and stuff. So again, you look at the time frame as I explained. I'm simultaneously looking at the charts, of course, right? I'm simultaneously looking at the charts, and I'm not just looking at the charts, right? I'm looking at the price on the watch list. Okay, so for me, I mark out my key levels already, right? And I'm looking at the prices. Okay, I'm looking at the prices. I'm trying to see whether they're actually going up or going down. So I know that over here we have a key level at $6. Okay, so and on my watch list, I'm looking to see if let's say if I see Nuke at 515, okay, 512 over here on the watch list, right? Let's say I'm looking at IPDN chart, but I know that Nuke key level is $6, for example. And I see go from 468, from what I remember, right? When I see it's at 468, when I look at IPDN, it's showing weakness, and suddenly I see Nuke showing strength. I see Nuke price going from 468 to 550. Now this is where I go back to Nuke's chart, and I start to compare between Nuke and IPDN. That's why I'll know. Okay, you know what? IPDN is breaking down. I see Nuke breaking out. I'll be ready for the $6 breakout, or anything like that. So I'm simultaneously looking at the chart, but I'm also simultaneously looking at their price based on the key level structure that I charted out. I know that 260 is key over here, right? So if I see this price is at 220, all right, on the watch list, let's say I'm still looking at IPDN, I see this at 220, and suddenly this thing is at 240, then I know that volume is flowing in on this. So I want to go and look at the chart over here. Now, of course, this is a very tedious way to do it. What you guys can do is if you guys have multiple monitors, you guys can open 3 charts. You guys can always open 3 charts or 4 charts and look at them simultaneously. But you see, it becomes very small and there's too much information for me, right? So this works for me, so I stick to just trading on one screen, showing one ticker. But I track the prices, to know to kind of give money out on the key levels, so I know which to switch to with a click of a button. So it's very quick as well, either way. Okay. Did I answer your first question, Kevin? I mean, if I go through the timing over here for IBTN, I think it pretty much tells, right? Remember, if you look at Nuke, I mean, you see this is selling off, right? You see this thing try to reverse, hit the resistance level, right? This is a daily gap, price goes down. Now you take this time, 9:55, right? And 9:55, you look at GMHS, this was continuing to sell off. Okay, then these two are where the volume is flowing off. So if these two are where the volume is flowing off, and you have a proper watch list that you built for yourself in terms of momentum, where do you think the volume is going to go? If there are three tickers, ticker A is dying, ticker B, you don't know, ticker C is dying. Where is the volume going to go in terms of momentum? Ticker B, right? So then you can look at ticker B then. What's it doing? Is it showing strength? Then you can get in. And you look at the time frame, 9:50 to 9:55, when Nuke and JMH was going down, this was consolidating and curling up. So you know where the volume is clearly rotating into. Yeah, guys, you're not gonna get great overnight just because I explained this to you. You need to practice to kind of get used to how price action works. Number one, to get used to how chart works. Number two, right? You need practice. You're not gonna just become great overnight just by listening to what I say and stuff. This takes time and practice because remember, trading is a skill set. You can't be good just because you heard someone. Oh, this is how I do it and stuff, and you can even do it, right? It's like if I were to tell you to go and chop some vegetables, but do it thinly sliced, right? And I can show you an example of how I do it. If you were to do it yourself, it's not going to be very nice. You know what I mean? You need time and practice. Understand the concept, practice it, get used to it, get the muscle memory over there, and over time you'll be better. That's just how it works. There is no shortcuts for this. Remember, right? The only the only people that will promise you shortcuts are scammers. Because they want your money. And they want you to believe in them. Because that's what you want to believe in. How do you determine that the 50 EMA was used for the structure on IPDN? Another question from Kevin. Now, I didn't there if let's say the price does not bounce off this 50 EMA over here, I would never use 50 EMA as my structure. Never. Because there is no reason for me to, right? We would look at choppy tickers like Nuke. Okay? There was no EMA trend at all. There was no EMA trends at all. It was very choppy. You see that? There was clearly no EMA trends over here, right? Is this really consolidation? No, this is just arbitrary price action moving, up and down in huge ranges. You can't call this consolidation, right? This is what we call consolidation. Small body candles, right, in a tight range of movement. Whatever Nuke did in the morning wasn't consolidation. Okay, this is just going up and down, right? So the EMAs are very, very but one thing you can see is that the EMAs are curling downwards as well, right? So it's high chance that price might actually go down. But this is not consolidation over here, right? So there's no EMA trend on this. An EMA trend is not found in every single stock or every single setup. It's only there when it shows itself to be there. Got it? Right? So you see, this is on the 1 minute, right? I like to use till the 5 minute. You can clearly see that on the 5 minute, there was no trend as well. Arguably, you could tell me that the 21 EMA is the trend, right? And you can see the price tap this 21 EMA over here at the 5 minute and try to bounce off from what price is this? 850 to 980. Now, if you ask me, is that a great scalp? I think that's a great trade, right? But eventually, all trend breaks down. You have to find a pattern. Is there a pattern that tells you there's a trend? You see this, there's no trend over here. There is no trend over here, right? The EMAs are underneath, the price is underneath the EMAs. There's no clear trend, right? Same thing for Nuke. Is there any trend over here? Right? You can see it's very messy. There's no clear trend over here. So when there's no trend on the EMAs, right? Don't force yourself to find one. Don't force a trend to be there if there isn't, right? So, but that's how I define it. Okay. Yo, guys, give me a second. I'm gonna pause. I'm gonna go to the toilet real quick, right? Give me a second. Um, I'll come back to the rest of you guys. Just stay here for a bit. 5 minutes. Okay, I'm back. I'm back. All right, my bad. All right, I'm back. Okay, so Kevin, I hope that answered your question, yeah? Um, no, yeah, for sure. I mean, if there's no clear trend, sometimes is you want to avoid it, you can, right? So trend takes time to build. Right? That's just a fact. Trend takes time to build, and you cannot just rush into it. I always like to take 5-10 minutes to let the market settle before making a decision, but if you have a clear, or rather, if you have something that's very clear that hey, this is going to run today, or you feel very strongly about it, you can just try. But if it doesn't work out, just have stops. That's it. It's not like you can't not have losses, guys. All right, that is how it works. You cannot not have losses. If you expect every single play to just be green, that's crazy. Sometimes on good days, when days clear, when there's very clear trend, the market flows very well, then yeah, you can have all green trades. That's gonna happen. That happens many times with us too, right? But in the long run, some great trades is going to happen. What time frame do you use? I use the 1 minute to 5 minute on the intraday, and I use the 4 hour to daily to find my levels. Oh, sorry, 4 hour to weekly. Hey, Dion, I joined late, so this question is just you. I have a question about open. Couple days ago, said daily candle. Wonder why. Sorry, not the daily candle, but the weekly candle, right? Not the daily candle, but the weekly candle. So now of course, open is a meme stock, right? So technical analysis might not matter too much if the meme hypes down. Okay, um, then the price is going to drop. One thing you guys need to understand is that technical analysis does not tell you about the future. It shouldn't. It tells you what levels the stock price needs to hold for the potential to do this and that. But it doesn't mean that if it holds this level means it's going to be guaranteed to do this and that. So it gives you ideas on what you need to do, but also at the same time, what to look out for and what to watch out for. Okay, so the weekly candle for open, right? The weekly candle for open is going to be this one over here. Okay. The weekly candle for open is going to be this one, right? This 200 EMA. And if I were to expand this all the way to like a multiple year time frame, right? Now I want you guys to look at this, okay? From ever since 2021, you can see that the price has had difficulty trying to reclaim this 200 EMA, this rate line over here. Each time price tries to test through this rate line, it just keeps getting shot back down. You see that? And this is the first time in many years that the price actually reclaimed the level. Right? You see, this is the 18th of August, the week of 18th of August, right? The price actually reclaimed the candle. And so that's why for me, I told you guys on Friday, because this is the weekly chart, right? So the candle closes every Monday to this action over here tells you a story, right? The Monday opening price is 328. The Friday closing price is 502 because this is a weekly candle. It represents 1 week of price action. So that's why we want the price to stay above 430 to retain at least some sort of bullish structure on the weekly time frame. And the price did close over 430, which is great. But does this mean that price is going to hold up and continue going crazy over here? No. Right? It's not. Okay, it's just an idea, right? It's just telling us that hey, price might do this. So staying on this is good, but does it mean it's gonna bounce the next week? No. Because if next week open got some bad news or anything like that, or the hype dies down, then technical analysis doesn't apply anymore, isn't it? Right? Because these are just lines on the chart. How can it define where the price is going to go? Right? It's still going to be driven by hype, cult, and all that. But at least it helps you to know what you're going to do. Think of it this way, like having road signs, right? When you drive on a road, there are road signs for you guys to tell you, oh, if you turn left, you're going to reach this place. If you turn right, you're going to reach this place. No, but Can you control where the driver is going to turn? You cannot. Right? So same thing over here. This price tells you that if it holds over 436, there's a chance it might bounce up. All right, if it goes below 436, there's a chance it might go down. But you cannot control where the price is going to go from here. It could still do this. But at least you know what to be looking out for. Alina, to answer your question? Okay. So next one is what is the hidden trigger for CWD accumulation in Friday's afternoon? What's the process to analyze the accumulation phase and anticipate a run later on? Now, what I'm trying to anticipate on CWD over here is the day 3 inside bar setup, right? Where if you look at the daily chart, we have a very strong mother bar candle followed by an inside bar forming within the mother bar's body. Now, this is not the nicest looking inside bar. I would prefer the wicks to actually still be within the body, but this works fine enough for me. All right, it's not the nicest. The nicest looking one's gonna be INHD, right? This is beautiful. Okay, right. You can see over here you have a day 1 of strong volume over here. 100. Look at this over here. 193 million shares being traded on day 1. Day 2, you have the candle on low volume at 7.8 million shares consolidating. And in day 3, it broke out from this consolidation and it went all the way from $4 to $7. It could go higher, right? Again, no telling where it's going to go, right? So what I'm looking for right now for CWD is to potentially do that on Tuesday. But an inside bar setup does not start until it breaks the upper wick of the inside bar candle. If you look at INHD over here, this is the second day, right? So this is the second day. This is where we're at with CWD. Okay, this is the first day. You can see 182 million shares being traded. Second day, 6.3 million shares being traded. Low volume consolidation. First day, 193 million shares being traded. Second day, 7.8 million shares being traded. Low volume consolidation. But what happened on the third day is that the price opened above $4, which is the wick over here, and it went crazy. But again, guys, again, I'm going to say this again, yeah? It doesn't mean that every single time a stock does this, the next day, if it opens up above this, wick, it means it's going to go crazy. No. All right. It could just open up at 4, hit 420 and dump. It could still do that. Remember this, guys, okay? I'm not telling you, there is no guarantee. There's no one strategy that means that it's going to work like this all the time, which is why we always have our stop loss in case it does not work out. Got it? It does not mean that when you see a sell like this, means it's definitely 100% going to go crazy. On Tuesday, if let's say this thing breaks 385 or 380, it does not mean that it's going to go to 4, 5, 6, 7. It could, but there's also a chance it could hit 380 and drop all the way down. It could, okay? Remember this. There is no 100% sure thing, guarantee shit in the market. There's no such thing as that. But you still need to have a plan, right? And all these charts over here, candlesticks, strategies, patterns, it gives you your entry price, but it also tells you what to look out for so that if it doesn't work out, you can have a stop loss that should protect you instead of holding on and being lost in a trade. Yeah, all right. So okay, so you got to come to terms with that first, okay, guys? I just, you don't be like, oh, but PPT said this. Yeah, I just say this, but again, it's not going to work all the time. So that's why we always have our stop loss. Okay? So on Tuesday, if we hit 380, above 380, the chance we might squeeze if volume is good. But if not, if on Tuesday there's no volume over here, then nothing's going to happen. And we might even lose 290, Right? This might be a multi-day consolidation, a multi-day inside bar until this thing breaks out or breaks down. But there's no guarantee. But so in reality of the situation, I could technically wait for Tuesday, right? And wait for the 380 breakout, correct? I could technically wait for Tuesday and wait for the 380 breakout. But I know that the base is 290. If I can get low risk entries at 3.1 to 3.0x, I'm in at 3.18, right? Off the dips. But if I can get entries at 3.1 to 3.0x, right? And if let's say on Tuesday this thing actually really breaks through 380, I'm sitting in a much better risk to what position for a push, isn't it? I mean, we don't even have to wait for this to go to Tuesday, right? This thing was already popping to 374 during Friday's close. And I did tell you guys to profit 360s, we hit 370s. But we're sitting in a good position right now. Correct? For those of you guys who are waiting for Tuesday 380 breakout, can you guarantee me that when he breaks 380, it's gonna go to 4, 5, 6, 7? There's a chance that he hits 380, it goes to 392, and goes down. There's a chance he could do that, right? But you see, for us who got in early on a low risk, a nice risk to reward, even if it is 380 or 392, we're still very, very nicely green. And plus, the reason why I decided to not wait for confirmation over here is because we're taking this into the long weekend. Not sure if we're going to get the same amount of volume momentum after that. So that's why I prefer to get this at the bottoms instead. But if we break 290 on the day, I'm going to close it off. But if not, I mean, this is still a nice move. But not the move I was looking for, right? Not the entire structure I was looking for. But it all depends on what it does on Tuesday. But I do want to say that the action over here that we're seeing on Friday, especially the EOD move on here, is very suspicious. So I do hope we do see something moving on Tuesday. But if it doesn't happen, we still got a nice move from 3.1 to 3.7, isn't it? Okay, all these reviews recording is going to be uploaded inside the Discord channel. Scroll all the way down to recorded reviews, right? And it's going to be here. Okay, so now next question. Die. Would you buy more when you see it ripping up like this? No. So my strategy for entries, okay, when I take a position, I'm full size in. Or basically how much I want to risk. I don't ever average up. So I'm just full size in and I'm done for the trade. That's that. All from there, I just manage to take my profits or manage to close my position. That's it. Unless I plan to take dips, right? But if not, then I'm full size in. Because I size in based on my risk. And I talked about this many times before. Okay, Die, if you're here, are you here? Nice here. All right, so I sized in based on how much I'm willing to lose already. So I'm really full sized in, and then from here I just need to manage taking my profits or taking my loss. That's it. Okay, JK. How do you define entries after a stock blows up? How do you define entries after a stock blows up? Right, so I'm pretty sure you're talking about IPDN, right? How do you define an entry over here after the stock blows up? There are multiple ways you could do it. Okay, I would say that one of the ways to do it is to look for key level breakouts, like I did with 745. As I explained to you guys on Friday, why 745 is a key structure for IPDN is because of this price action separation level over here that we have, right? And you guys can clearly see that if I were to be waiting for dips on IPDN, it will never come to me. Okay, it won't ever come to me, right? Let's say I see strength over here, I want dips, it won't ever come to me. So I have to wait for the breakout to play the move at 745. If you want dips, you could, or rather, if you want to play off, we look for re-entries off a stock that pop up, right? Number one thing that you should not do is to chase the move. Now, of course, you might be lucky sometimes where you chase the move and let's say if you buy over here at 580, 570, there's a high chance that there's a chance the stock might actually continue to run up to like $8 over here. It's possible, but just one time, okay, that doesn't happen. This is what's gonna happen to you. You buy at 1084, it drops all the way down to $9 and maybe even lower. Right? So what you want to do is let it build. Okay, you can clearly see that there is a flag pattern over here being formed, isn't it? And you will not have this pattern if you don't have these candlesticks forming over here that's giving you all this information? So what do you have to do? Wait it out. Let for something to build, right? Let the EMAs compress, instead of being so far open up. Let it build. See what happens during lunchtime. Is it a downtrend breakout? But one thing to consider is this, JK. Finding an entry is very important, depending on what strategy you're using. But you also got to tell yourself where your stop loss is going to be at. One example could be like this, right? There are multiple ways to find entries over here. One could be, and it all depends on what your trend line and thesis is. Okay, I'm gonna find 3 entries for you guys right now, and 3 different ways to play. Might work out, might not work out. Remember, no such thing as a setup that's gonna work 100% of the time. That's the reason why we always have our stop loss plan given. Now, one entry could be here at 645, and I'll have my stop underneath 606, this current base. Why? Because based on my thesis, based on the chart, okay, this is where the stop is going to break down from this flag. And that makes sense, right? Am I telling you guys bullshit when I'm adding this position over here? No. I'm telling you guys technically this is what I'm looking at. Okay? That's one. Now, the second thing is, this is one entry model, right? This is one entry model. Now, the second entry could be over here. As the price flush down into this 1 minute demand zone, and I see a bullish candle forming over here, I could take my entries over here at 6.1s and have my stop loss under 575, 555 max on this 1 minute support level. Or, if you look at the 5 minute, maybe that gives us a little more clarity. Let's see. Yeah, I mean, there's a nice little bottom base over here, right? You see this? Right? So, on this note, okay. So you can see right here, as the price bounced off. Right now, we have the price selling off, okay, and then suddenly we have a very nice strong bullish candle coming in, and it's an engulfing one. So I could take my entries over here and have a stop loss underneath the low of this candle, or the at the structure low, which is 555. But you see, that's another entry model. One is 645, stop loss under $6. One is entries over here, but you can see the stop loss plan is different, right? Why? Because the structure you're looking at is different. The entry model you're using is different. It has to be aligned to what you're looking at. It has to be aligned to what the reason for entry is. And it has to be based on the chart. And whatever happens, you have to respect it, most importantly. Not because you have to understand, not every downtrend breakout is gonna go crazy like that. Not every bullish engulfing candle is gonna go crazy like that. Right? We take, for example, Nuke, okay? Alright, we got a downtrend breakout over here. What happened? Shit fucking dump. Not every downtrend breakout is gonna work out like that. Not every, so do you see this is the price hits this level over here, right? And then we have a bullish engulfing candle on this. I could take my entries at $5 and have my stop loss under 485. And no, this is still a nice scalp at 530. Right, same thing over here. So look, price went down, flush, formed wicks, another bullish engulfing candle over here, and wicks. I could take my entries over here at 470s and my stop loss under 460. Still a nice scalp. Nothing crazy over here though, because the volume clear wasn't here. But you can see this is still a nice entry model over here. So it's the same thing, right? It's the same thing. Okay, it's the same thing. But whatever happens is if it doesn't work, and the last entry model obviously is a 745 breakout play. But what's important over here to understand is that if it doesn't work out, you respect your plan. Right? Every entry model, criteria, setup is different. Okay, JK? Hi, some pre-market stock rise and hold price until morning until market down. Why is this and how do we know which stock we're not? So guys, whenever you guys are going to be asking me stuff like how do you know this, how do you know that, and stuff like that, the answer is we will never know. Okay, this is a fact. We will never know. Okay, so now, but why is it that some stock they hold price until morning and then they dump is because people are just taking profits, right? People are just taking profits, or market makers might be hunting liquidity down before grabbing it and then pushing the price up again. Could be a multitude of reasons. Okay, but that's the reason why I don't really like it. Trading stocks that's been running already too high going to market open, very risky. Doesn't mean you cannot go higher, but we want to actually see a drop first, consolidation, and then grab it for a push up. Okay, and remember, we will never know which stock will do this or that. There are some stocks that trades super nicely in pre-market and then market open, it halts up. We've seen it happen before. Right? And will we know? Obviously not. There's no way. When it comes to how do you know this, how do you know that, there is no way. You can never guarantee anything in the stock market. All you can do is have thesis, plans, right? And you stick to it. A plan, right? If this runs, then this should drop. If this drop, then this should run. Have a plan so that you know what you should do if plan A doesn't work out, or plan B happens and plan C happens. So you know what to do, right? But you will never know which one's going to hold, which one's not going to hold. This is a fact. You would never know. Okay, race. All right. I wish I could tell you how you could know, but you will never know. There will be some like, oh, but you could have like a opinion, right? Like, oh, but I've seen recently stocks doing really well going to open kind of dumps, and then if it's right, it doesn't mean that like you're going to be right all the time on that theory. It's just that based on what you experienced for the week, that makes a lot more sense, and you stick to that thesis, and it works out for you, right? So you have a higher probability or higher chance of understanding this is going to happen. But 100% will you know? Obviously not. Okay, Jennifer is asking, how do you become better at reading at the charts? Jennifer, sorry, but the only easier way over here for you to get better is to really practice. Right? Trading is a skill set. It's like you're asking me, Jennifer, how can you get better at let's say how can you get better at running? Can you get better at running by sitting down and watching videos about it? Can you get better? You're not gonna get better at running just by sitting down and watching videos about it, right? How can you get better at running? By actually going to run. So how can you be better at charting? By actually charting, right? And then what you can do is you can upload your charts onto the charting chat over here. Tag me, and I'll answer your questions for you. Let's see 1 second. Yep. Write your questions. Try charting it. Tag me and ask your questions for you, and then I can guide you on how to better draw it. That's the only way you're gonna get better at charting. It's 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 oh fuck, sorry, my bad. It's a skill set. You need time. You need time and practice. You can't get better just because you watch some videos about it. Okay, that's the truth. There's no way. There's no other way to get better at reading the charts by actually, putting time into it. All right, you can't just get better just by wanting to get better. Same for running, right? And stuff. You wanna be able to run longer distance and stuff. You can't increase your distance just by sitting down and watching videos about it, about how to do it. You have to actually go and do it. I know you said I know you said you scale up, but if I bought only 10% of my account of 5K, bro, die. Let me ask you this. 1% of your account growth a day isn't enough for you. How much does your um how much does your bank gives you a year? If you consistently make 1% of your account growth in a day, right? And let's say there's how many trading days, we don't count holidays, let's say 200, roughly around 200. That's gonna be 200% account growth in a year. You're gonna say no to that? You're thinking this very short term, right? You're telling me right now, okay? You tell me don't buy more, and I'll ask you this, okay? Let's say you buy more over here on IPDN, all right? You add over here 320s, it goes up, you buy more, and next thing, this thing happens. What are you gonna do right now? What are you gonna do right now? You're asking me right now because you see that IPDN doing this, right? But how would you know IPDN was gonna do this? Can you guarantee that every single stock you trade is gonna do that? You gotta learn to compound and look at things in the long run instead of just trying to get rich quick. Okay? And I'm not sure, you said that you bought 10% of your account, for example, right? That's not how I actually talk about managing your risk, right? I did not tell you guys to manage your risk like that. I mean, maybe you have your own way of managing your risk, that's fine. Okay, then you can stick to that if it works for you. But how I manage my risk is that I don't size in based on how much of my account size I want to put in. I mentioned this before. I size in based on how much I want to lose if this trade doesn't work out. No, you could buy more. You could look for re-entries and stuff. But my question to you is, if you buy more here and stocks drops hard, what are you gonna do? You're gonna turn a green trade red, isn't it? Out of out of 5 stocks that ran on Friday, only one did this. So just think about that. Out of 5 stocks that ran on Friday, only one did this. So you can think about it. All right? You can think about it. About how often stocks actually do stuff like this. I mean, you could try if you want, Matt. I mean, this is but you see, if you were to do this, right? Let's say Nuke, for example, it consolidates above the 21 EMA, you're gonna take it, and then the price is gonna dump on you. I would say it's you could still trade it. I think that could be something you could backtest. I've never backtested that. I've just watched it myself. Right, you could backtest it if you want, right, and see if it works out for you, Matt. Right, you could always just backtest it. But for me, I don't think this is gonna work because the 21 EMA can be found on every single ticker in the markets, right? There's a 21 EMA on every single chart. Okay, when there's price action, there's gonna be 21 EMA. That's just how it works. Some price consolidates above the 21 EMA like this, right? It moves, but some price that consolidates above the 21 EMA moves further. You know what I mean? So you're not only dealing with one stock, right? If that could work if you're trading large caps when there's only one ticker a day. Remember, Matt, there's only one ticker a day. Because again, there is never going to be another Amazon, another Nvidia. No, right? Every day they're going to be there. I will show you guys what I mean by that. If we look at the volume disparity for BABA, every single day there's volume. Okay? There's at least volume every single day. If we look at Apple, there's at least volume every single day. You're not going to see that for a stock like IPTN. Why? Because when it comes to small caps, every single day is different. So if your scanner is specifically on an EMA strategy, then you're dealing with 5 tickers that potentially could go. And all of them are consolidating on the 21 EMA. So what you're going to do? You know what I mean? Because they're all different, right? The next day is going to be something different. The U 2% rule, I don't know what you mean by the 2% rule, but I size in based on how much I'm willing to lose. So if I plan to lose 2% of my account on this trade, then I size in so that if it doesn't work out, that actually happens. I actually lose 2% of my account in the trade. No, yeah, you could, Kevin. That's fine, right? You could take chop your stock, just immediate stop and break even or keep it tight. That's fine too. 21 and 50 EMA on the 1 to 5 minute chart and 50 to 100 EMA on the 4-hour 1 week chart. I don't use the 50 EMA on the 4-hour to 1 week chart. I only use the 200 EMA on the higher time frames. Matt, I'm not sure what you're talking about over here. No, yeah, I was red on Nuke and GMHS too, but you guys have to understand that like there's an equal chance that those tickers could have flew as well. You heard my analysis and my reason as to why I was taking them. Don't they could very well just fly as well. You can't just tell me that oh I refuse to take this because I want to wait for something to go. I mean you can, you know, then what if this thing does actually go, then you end up chasing, right? I when I take a play is because there's a reason for it. If it doesn't work out, then it's just all part of the market. I close my position. That's it. You cannot tell me that, oh, I should not have done this, I should not have done that after seeing the trade not work out. That's bullshit. I mean, what the fuck you mean by you cannot do this, cannot do that, cannot do this, right? Nobody is ever going to know. But you always got to have a plan and at least react to it if it doesn't work out. You can cut quickly. That's fine. You saw my analysis over here just now, right? You can always cut quickly. Guys, if you guys are new over here, please ask any sort of questions you guys have, anything, you know, regarding the server, regarding whatever, please just ask, all right? And yes, like what Coco said, if you check my win rate, I'm not 100% win rate trader. I don't think anybody is, okay? I will have more losses than wins on the day sometimes, but my losses, I tell you guys, cut it quick. But the wins, do I ever tell you guys to start everything straight? What did I say on Friday? I said IPDN leaves 6 to 10 for runners. Did we hit $10? We hit more than that. I even gave you guys re-entries after that, right? So you don't kill a runner if you know that it's going to run, right? When you know the other two tickers are dying and this is the only ticker showing strength, why are you in a hurry to close all your position in that trade? You know what I mean? Let it ride. Janet, for the platform is Thinkorswim. Is it better to wait till 8 a.m. to buy? It depends on your schedule. Yeah, it depends on your schedule, right? I would say some people like to trade 4 a.m. Some people like to trade 9:30, right? Some people like to trade on 7 onwards. It depends on your schedule. There's no right or wrong for this, but it has to be something that you can consistently stick to. All right. Uh, no, I traded twice. The 745 breakout, I went a little bit heavier because I have profits to buffer from the first trade. This is on my big account. So but I did take like a 10,000 loss each on I GMHS and Nuke. So it's only 40,000 profits on the day. For me, on the 360 breakout for IPDN, I would just have my stop loss underneath the 360 level. It was because it was a strong breakout. Yeah, no, but Alan, if you GMHS, right? You mean if you're talking about the EOD knife? I mean, nobody could have known this was gonna happen. You don't tell me this wasn't looking good. This was looking good. You don't tell me this wasn't looking good. This was actually looking good. But Chinese name do always be doing shit like this, and especially when it's a Friday. Nobody knew this was gonna happen. We would not expect to go from this to this, you know what I mean? So you just have to react to it. Because there's a chance that it could go from this, right? And then a big green candle. It could happen like that. Never know. Right? Nobody's ever gonna know what's gonna happen next. Can you tell what candle is gonna happen from here? You're not gonna know. Right? But you don't tell me this wasn't looking good because it was looking good. Matt, numerous times you mentioned those EMAs. I was wondering which ones to use. Oh yeah, so I use all my EMAs on the 1 to 5 minute, but on 4 hours onwards, I only look at the 200 EMA. GMHS was much below the VWAP. I didn't go heavy on it either. Your thought? What do you mean? For me, I think one of you guys was asking me about this, right? GMHS on Friday, I said, okay, you know what? GMHS has a plan. Okay, it has a clear trend over here. Now, if you are trading GMHS, what you can do is you can take it at 20x and look for that 10 cents. I said that, right? If you want the 10-cent scalp, you can take it and then leave the rest and watch in case, right? And then have your stops under like the low of the day or something, or underneath the trend line of $2, right? First level is always going to be VWAP. So when this thing broke out from it, good. Okay, but there's a chance that this thing could just hit this and go all the way down. Because you know, it's just Chinese, it's Friday, it's the end of the day. I mean, you can see they decided to do it after the breakout, which is very, very criminal. But it is what it is. What platform is this? This is Thinkorswim by Charles Schwab. What was your conviction on for IPDN going from 7 to 10? It was the only ticket running on Friday. The momentum was super strong. Each time I thought it was gonna break down, buyers just keep stepping in, right? And we do have a lot of range on the chart. So if anything has to go 7 to 10, it was definitely not Nuke. It was definitely not GMHS, right? It was IPDN. But also because I was in the position to ask for unrealistic targets like this. I can use Weeble Go Trade, but use Thinkorswim to learn to read charts. Is this okay? Yes, that's definitely okay. But you know, honestly, if you want to use Thinkorswim to read the charts, why don't you just use Thinkorswim to trade then? Why do you want to use Weeble to trade and then use Thinkorswim to read the chart? Why don't you just use Thinkorswim to read charts? Unless you tell me you want to trade 4 a.m. because Thinkorswim does not allow 4 a.m. trading. But if you do not trade 4 a.m. stuff, why don't you just use Thinkorswim to chart and trade? Isn't that easier for you? Ah, okay, then that's fine. That's fine. That's fine. That's fine. Is this the desktop version of Thinkorswim? Yes, it's the application. It's just the application Thinkorswim. It's called Thinkorswim. The application is called Thinkorswim. All right. Let me show you guys. The application is called Thinkorswim. Right? Shit, bad. The application is called Thinkorswim. Let's see. Let me see. Why can I? Oh, just search Thinkorswim on Google. You should be able to find it. TD Direct. What's TD Direct? What's TD Direct? Oh, is it different? Wait, Jennifer, where are you from? No, okay, then that's different, right? TD Direct is not Thinkorswim. I don't think you have access to this. I don't think you have access to Thinkorswim. You have access to Thinkorswim from Canada? I don't think so, right? You can try. I don't think you have access to this in Canada. From what I know, maybe they changed. I don't know, but you can try. Yeah, you can try. If possible, could you share with me six? So no, I did a large chunk over here because I would say I had more conviction on this because I saw Nuke and Jimmy just died, right? So I had a large chunk on this. Um, I had around close to I don't remember. I think 50,000 shares and stuff on this, and then I added. After I closed off, I added. I traded this 745 because I had good profits, right? I traded 745 breakout, and this thing went crazy as well. So. Thinkorswim does not charge commission. From what I know, Thinkorswim does not charge commission. I'm in Mexico now. I think we can get to Weibo. Yeah, okay. I mean, if it works for you. Yeah, that's what Jennifer was saying. For people in Canada, you can if you have Weibo, use Weibo. Make sure you have the Turbo Trader function on. If not, use Thinkorswim. I'm sorry, use IBKR. Yes. Yes. Weibo is great. Weibo's chart is very user friendly. If not, use IBKR. I think Weibo itself is a very user friendly platform. Oh, you do? Wait, oh, you're from Singapore too? But I'm not sure if the Weibo from Canada gives you the Turbo Trader function. I know it's very limited in certain countries, so you just have to make sure that it's there, right? Just search this over here. Hold on 1 second. Nice words. All right, search this over here. Okay, so Jennifer, oh, you speak Cantonese? Oh, all right, it's fine. They homo, so they say. Are you okay? Are you good? Oh, your family can speak Mandarin as well. All right, 你好吗? All right, now you can click on the link over here. You can check if that functions in your Canada's Weibo. If it isn't, then I highly recommend you, or I wouldn't say recommend, but suggest you to switch to IBQR ASAP. And to set up an IBQR for trading, it's actually mentioned inside infographics over here, right? So you can go all the way down. All right, over here underneath infographics, right? Recorded that and you set up a trader workstation by IBQR. Yeah. So Oliver, I'm new to the channel. Welcome. How do I find swing plays? How do I follow the lesson of swing play? Now, of course, different analysts has their own ways of doing things, right? Different analysts has their own ways of doing things. It's something that you guys need to be able to adapt to, right? This is something you guys need to be able to adapt to. And the best way for you to adapt to an analyst style of alerting is by looking through the channel and making sure, right, this is something that resonates with you. Hold on 1 second. Okay. So one example is this, right? They all have their own alerting style, right? So you have to get used to it. That's the first things first. Now for swing, so if you're looking for swings, right, the swing channels that we have are going to be Diana swings and 007 swings. Again, they have their own ways of alerting, right? So some of them you can see is very simple. SPRC, buying below 4.2, one small chunk at a time, stop loss 3.2, possible levels, blah, 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 right? And on Friday, SPRC pumped, right? So this is there, right? So this is a nice swing trade. And you can see over here, entry, blah, 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 so on and so forth. And then, this, and then there's a plan and whatnot, right? And then he will give you guys the up current holdings, so on and so forth. Now, Diana swings. Now, so O7 mostly does biotech stocks. So if that's what you're actually looking for, then you can look for biotech stocks over here. All right. Now, if you're not really a fan of biotech stocks, you just want small cap swings, for example, you could go and look at Diana swings. Now, her alerting style is very different, as you guys can see, right? She I mean, she tells you gets filled and stuff, but she updates a lot. So you have to kind of really keep up with it for her. You can check out with stuff in the swing chat as well. But if swing trades, small caps is just not your thing, then you can look for 1% plays where he alerts swings or even position trades for tickers like Amazon, PDD, Lululemon, MicroStrategy, and those hit pretty well too, right? He alerted Amazon for a swing at 222, right? And it hit 231, take profit 40%, next target 240. Yeah, I mean, it's just different styles for whatever you want. And you can see that the way they alert, right? It's very different. So stick to which one do you think is gonna fit you best. And if you are planning to swing though, please don't follow me. All right, I'm not a swing trader. I'm a momentum trader. And for my channel, it's still best if you can trade, you can sit down and focus and trade on a computer, not phone. All right, this is just something I really want you guys, I want you guys to know, right? If you trade on your phone from my place, if you know what you're doing, fine. But if you're new, I highly suggest not to. Okay, Oliver, does that help your question? You could set sell limits for sure, but ideally at the end of the day, you still want to manage your trades as much as you can. Because the thing about small caps is, like okay, we look at SPRC for example, right? With there are possible levels, you slowly take profits. You don't just sell everything in one chunk in one part, right? Let's just say, for example, SPRC, right? James Pond said these are the levels, right? And for some reason you think that, let's say you're new to trading, okay, and you see the levels that James Pond gives you, and you buy in at 4.2, for example, right? You buy in at 4.2 with him, stop loss is 3.2, and then you look at all these levels over here, and then you be like, okay, $8. Let me set a sell limit at $8, and you go to bed. Now the next morning, SPRC hits 729 from 420. Don't tell me you're not gonna take profit because it didn't hit 8. You know what I mean? Right? And you see, this didn't hit 8, but there's no excuse to not to turn this actual green trade over here red. Right? So ultimately, at the end of the day, it's still best for you to manage your own trades over here. But with small caps, you cannot hold on to them, right? Because you can clearly see, this fucking ticker over here, in the end went all the way down like that. But it was a nice trade. You cannot say this is not a nice trade. This is a nice trade, right? So if you don't want to stomach this volatility, then this channel over here is the best for you. It tells you how long you need to hold. So, guys, like I said, one more thing is that sometimes we tell you that we want to hold this for a month, but if it decides to move within that 2 weeks and it hit targets and maybe it hit near targets, we have to still take profits. Okay, there is no timing or schedule on the market that tells you when it wants to go and whatnot. Yeah. There are multiple different stuff for you guys over here, depending on what your priorities are at your current point of life or your job and whatnot. So you guys can enjoy this. Okay, all right. So okay, I think I've taken up too much of your time, guys. Enjoy your weekends. And I'll see you guys on Tuesday. It's a long weekend, all right? So um take your time to go through the onboarding stuff. All right, over here. Take your time to go through this onboarding videos over here. I'm gonna post this once the recording's processed. And yeah, I'll see you guys around. All right, thanks guys. So require, yeah, thank you. All right, see you guys around. Cheers, bye.